Out here looking at, did you notice? There's a new stock under Jeremy's stocks? Maybe somebody bought a few shares today. Yeah, looking here, looks like it's a bit of a mixed bag. I would say more red than green, but a little bit of a mixed bag. So Planet's having a pretty good day. Planet's had a heck of a year so far. Let's pull up a year to date for the Planet. Planet's been kind of insane this year so far. Yeah, the Planet is sitting on nearly a 30% gain so far this year. So a lot of momentum in that one. Avon's having a little bit of a green day. Elf on a Shelf's green. Tesla's green. Tesla's starting to come back, folks. I mean, Tesla was, 181 a few trading days ago? Now it's already 192. That's a pretty, over a $10 move in a very short amount of time there. It'd be funny. It's so hilarious. Did you guys hear what they were talking about? That lady kicked Tesla out of the Mag 7. All these Wall Streeters have all kicked Tesla out of the Mag 7, which goes to show you how bad sentiment has really gotten around Tesla stock, right? Which also makes you think, is it time for a turn in the sentiment in regards to Tesla? It's been pretty negative here for quite a while. And maybe it's time for a little turn. PayPal's green here today. Nike's green. Texas Roadhouse is green. Meta is green like it is every flipping flapjacking day. As far as Red Dead Redemption, we have Target, Mattel, Cake, Shopify, Amazon, Alibaba, Palantir, JWN, Honest. But a lot of these moves are little moves. They're like 1% moves. So I think everybody's waiting. Everybody's honestly waiting on all these big earnings to come out here over the next little bit of time. So that's kind of what's going on there. If we go ahead and take a look at safety stocks watch list, a little bit of a mixed bag here. Apple's having a tough day, down 1.9%. There's rumors coming out of Asia that iPhone units could be down quite considerably in 2024, which doesn't surprise me. I was kind of shocked after they had released that iPhone. All the analysts were jumping on the bandwagon thinking this was going to be a booming iPhone. And I was just like looking out there and I was like, okay, I don't know anybody that was really excited about that iPhone. As I talked to everybody and I'm like, hey, you getting a new iPhone? You excited about it? I didn't hear anybody who's like, was pumped about it. So I didn't think it was anything special. And then, I didn't even get it. And I almost get a new iPhone every single year. So for me not to get the new iPhone and be like, I'm going to stick with my 14 Pro Max or whatever it's called, I mean, that's pretty telling, right? And so, I don't know. I never thought this one would be a good one. Maybe the next cycle could be a good one because they're talking about, from what I heard, they're going to make bigger iPhones. And usually whenever Apple goes with a bigger iPhone, usually a big upgrade cycle. So I don't think this 15 is going to sell well at all. The 16 next year, if they really do that and all their sizes are bigger, I think that could be a next super cycle for Apple. But that's not today, right? That's next year. So, you got to kind of play that in-between game there. I don't know. We'll see kind of what happens there. First quarter possible buys watch list here today. Obviously, SoFi getting hit hard. RH is a funny stock, huh? Just up, down, all around. The Hood's down here today, 2%. Netflix down, Wynn down, Zoom down, Palantir down. Callaway Golf, Top Golf down here today. Alibaba down, Cake down, Mattel down, Target down. Avant, PayPal, Nike, Nvidia, and Guess are all up here today. Go ahead and take a look at the stocks I'm hedged against. Big down day for Polaris. I've got to take my profits at some time on Polaris. I feel like I say that every freaking time. When is Polaris's earnings coming out? Let's see, Polaris IR. As I kind of want to hold it through earnings. Okay, it's on the 30th. Today's the 30th! Polaris? Today? What? They already released? It was this morning? Let's see. So they released this morning? I don't even remember seeing that on the earnings. Did I totally miss that? Earnings Whispers must not have put it on. I do not see Polaris anywhere on there. Earnings Whispers, get it together. What? Polaris? Okay. Well, anyways, so let's look at their numbers here. Sales were down 5% year over year. Yep. Gross profit margins down 300 basis points. Yep. Total operating expenses up 8%. Uh-oh! Net income down 47%. I freaking knew it. I knew it. They're in trouble. Net income from continuing operations down 366 basis points. Diluted EPS down 46%. I freaking knew it. I knew it. Wow. CEO commentary. We came into 2023 confident in our industry-defining innovation and compelling product portfolio. Yeah, interest rates are high, dude. Doesn't matter what you freaking got. Enabling us to win the share battle across our segments with a complicated environment. Earnings per share performance came in below our expectations. I know it. Due to unexpected I know the business better than you do, Mr. CEO. Due to unexpected operational challenges. However, the term has identified and has already begun making meaningful progress on our efficiency and margin initiatives for 2024 and beyond. As reflected in our outlook, segments of our industry are expected to remain challenged in 2024, but we believe they will continue to capture market share and robust product lineup, blah, blah, blah. The Polaris team, relentless efforts, blah, blah, blah. Okay, so, yep, everything's going exactly how I thought it would. Yes, indeedy. 2024 outlook. The company expects 2024 sales to be down 5 to 7% versus 2023. Knew it. Company expects adjusted EPS from continuing operations to be down 10 to 15%. Company has not provided, blah, blah, blah. Okay, yep. It's going exactly how I thought it would go. Yep. So, now the question is, do I want to take profits on it? We know it's bad now. Everybody knows it's bad. The world knows it's bad. So now the question is, do I want to go ahead and take profits on it? So Polaris, I'm strongly considering, my issue is, where am I going to put the money? Because I've got to re-hedge. I can't just like put that money in long positions. I already have plenty of money in long position. Lord knows that. I need money in hedges, right? So the question is, what do I hedge against? I mean, freaking Chipotle's out of control. This stock is so far overvalued, it's in another stratosphere. I also think they're going to likely miss numbers and estimates that they have for 2024. And so I think it's a perfect situation of stocks, in my opinion, overvalued, and I think they're going to miss numbers. But, man, Chipotle is such a freaking cult stock. I just don't know if I want to. The stock's so overvalued. I don't think they're going to hit numbers this year. But, damn. So it's a tough one to hedge against. And if the market does go down, Chipotle's going down all the way to Chinatown. So, I mean, oh, man. And my issue is I'm having trouble finding anything more attractive as a potential hedge against than Chipotle. Because you got a perfect example of an overvaluation plus a company I don't think will hit their 2024 targets. Damn, man. Ugh. I'm going to sleep on it. In regards to Polaris. The thing with Polaris is it's not like things are going to magically get better tomorrow for Polaris and all of a sudden everybody's going to, Yeah, so I am interested. I'm interested in Whirlpool. Whirlpool is a stock that's interesting to me. I do believe we're kind of bottoming out this housing market in terms of, like just hardly anybody moving. So yeah, Polaris, bottom line is I'm going to sleep on it. But I am getting to the point where I'm probably within a day or maybe a few days of taking profits on the Polaris and maybe moving that into something else. I just got to figure out, is it Chipotle? Is it something else? That's a tough thing for me overall here. But there's not a lot of great hedge opportunities out there right now. If you guys can think of some hedge opportunities, let me know. I already have some hedges against Apple. So, I was thinking about that one. But I don't know, man. This is tough. Tough. SDAO, I don't really like SDAO. Oh, I'm not even hedged against SDAO anymore, actually, if I recall. So I only have these as hedges right now. I don't really want to Oh, wait a minute. Didn't I already sell my Tesla hedges? Didn't? Oh, no. I have one Tesla hedge left, if I recall. Yeah. One Tesla hedge left. So, yeah, I don't think I want to hedge against Tesla more. Because my thinking in regards to Tesla is the only way that stock moves down huge from here is if the whole market, crashes, something like that, crazy happens. Which you could say that for every stock, right? Well, if the market crashes, all, stocks go down. That's just how it is. So for Tesla, I don't think I really want to hedge against that baby anymore. Yeah, I have one put option still left in regards to Tesla, my Tesla. But I don't really want to do more there. I'll just be honest with you guys. I think it's already had, everybody on the Wall Street just took it out of the Magnificent Seven. I mean, the sentiment, I just don't think it gets that much worse outside of, once again, a whole market crash. But like I said, you could say that for every stock, right? I mean, Chipotle is just the only one that's looking pretty interesting. Toll Brothers, I already got some hedges against Toll Brothers. And the other issue with Toll Brothers is people can't stop freaking buying new homes. They're addicted to buying new damn homes. I'm like, geez. So, yeah, man. I don't know if I really want to hedge against Toll anymore, to be honest. So, it looks like Elf might be the winner chicken dinner here today, followed by Tesla. Looks like SoFi and Fubo are the big L's of the day with Revolve and Honest. So, what does that tell you? Look at the 5 worst stocks here today. SoFi, Fubo, Revolve, Honest, JWN. What does that tell you? Small cap, not compelling to folks today, right? And I think a lot of that comes back to economic data came in this morning, much better than expected in regards to jobs. And so people start thinking, oh, the Fed is not going to cut rates anytime soon. That's the fear there, folks, okay? Woo! About 5 minutes till market close. 5 minutes till market close, folks. Oh, baby. Starbucks has been a crap stock for quite a while now. Versus Microsoft and Google have been rolling heavy for basically about a year and a half now at this point in time. So 2 totally different situations there.
I think what's impacting things here is the revenue guidance for the fourth quarter that we're in right now. They're guiding between 1.6 and 1.9 billion in revenue. Street was looking for 1.8, so a little on the low end there that could be impacting. I would also note they say EA Football Club. That's the new FIFA game or new version of their soccer game taking over from FIFA. They said 7% growth in net bookings year over year for that compared to the same game a year ago. But let me move over to Microsoft, John, because I was picking through the release and some interesting stuff here to talk about as we see shares are falling about, a little over 1% now. Office and commercial products, that revenue is up 15%, they say, and they said that's driven by Office 365 commercial revenue growth, which is up 17%. That could be Copilot. We're going to have to get some color on the call, though, guys, because they don't really break out Copilot numbers, nor do we expect them to, but we do want some commentary on how well it's selling and how much of that growth we're seeing in Office 365 they can attribute to sales of Copilot. I'll also note Xbox. This is the first quarter that represents Activision after they completed the transaction last fall. So we see Xbox content and services revenue just skyrocket over 60% there.
Wow.
Again, mostly driven by the representation of Activision.
By the way, EA, they need to come out with the NCAA football game. If they come out with the NCAA football game next year, I mean, woo! You want to talk about some growth? There's so much demand for that NCAA football game. Outside of GTA 6, I can't think of a bigger demand for a game out there.
So that's really this theme we've been talking about this whole earnings season. Which companies now, after we've kind of gone over the hype cycle, which companies are actually going to start making money off of AI? Sounds like Microsoft is one of them, guys.
Perhaps, yes, indeed. And we're just a couple weeks away from the 1-year anniversary of their big coming out moment with Office and AI and Open AI. Steve Kovac, thanks. Now, Microsoft, a big name, reporting in overtime today. Adam Crisafulli, Alphabet is another one, and I believe Alphabet right now is still down about 4.5% roughly. Looking at these numbers, I notice it's really Google Cloud that came in a little better than expected, but that core business, Google advertising, search and other, and YouTube ads, both of those just in line are actually a little bit under the consensus expectation. I wonder how much that has to do with it.
Yeah, that definitely, I think, the knee-jerk reaction. I think for a lot of these names, if there's anything wrong, especially in the initial, reaction after the first few minutes after the press release, I think the reaction will be to sell the stock in this type of environment when the names have rallied so much. The core money makers for that company, especially, are YouTube and the core search business, and so to the extent they're falling a little bit short of expectations, I think that just gives people an excuse to book profits.
We're still waiting on AMD, by the way. Still waiting on AMD.
It's really nothing to complain about. And even on Alphabet, it's hard to really say that, there's really anything horribly wrong with the numbers. I think it's kind of just, again, a knee-jerk reaction lower in some of these stocks after a big run. But, I think the calls will be very important for a final verdict.
Yeah, and of course, shares of Alphabet are down 4% right now. Microsoft basically at the flat line, EA lower, but Starbucks is actually trading up 2% higher despite that big miss on international comps. Well, Skyworks earnings are out as well, and Kate Rooney has those numbers.
Hey, Morgan. Yeah, so Skyworks here looks like earnings was a
fuck you, Skyworks.
Number $1.97
Fuck you.
than expected on EPS.
Unbelievable.
Revenue pretty much in line, $1.2 billion there.
Looks
like Q2
I just sold you.
is in line, slightly light here on
Unbelievable.
EPS guidance, $1.52 billion versus $1.52 versus $1.54. So slightly light there. We do have some comments from management in terms of the smartphone market. They first start here talking about good execution, robust profitability in light of the ongoing macroeconomic volatility. They say they delivered record quarterly free cash flow, and they talk about strong working capital management and managing CapEx. They do say here, though, in terms of the mobile business, they say it's going to be down seasonally and sequentially, consistent with historical patterns. And then in broad markets, they do anticipate modest growth in December. They do say the Android smartphone market is recovering, so some commentary there on the mobile market. But you can see shares up more than 5% here.
Could go to 200.
Okay, Kate Rooney, thank you. Mike, it's pick your poison, right? You can talk about any of the mega cap tech names, whether it's, Microsoft or Alphabet and the moves we're seeing there so far, or a Skyworks, which is shooting higher, and then, of course, some of these consumer names,
you piece
and
of crap.
And it does seem to be a bit of a mixed picture, at least in terms of how investors are digesting these initial reports.
For sure, which is what you want to see. I always say this about earnings season. You want companies to go their own way. It kind of nets out to a relatively low volatility reaction market-wide.
Now, of course.
Microsoft
don't even beat numbers,
to its $3
and then have your stock shoot higher.
Where it finished last week. That's a pretty decent reaction to hang on to most of those recent gains. As everyone's saying, we need to hear the guidance. On Alphabet, modest disappointment. Again, going back to a price where the stock traded a week and a half ago. Margins look okay. I'm not sure exactly. People have more aggressive expectations of how much margins can widen out in the quarter. But what they can control seems to be, in line, even if, again, the stock did have a little bit of a sprint to the all-time highs just in the last week or so. So far, I think on a market-wide basis, you can live with these sorts of reactions, even though it's a little messy in the short term.
And Adam Crisafulli, that makes me wonder about AMD and what we're going to see there, given that Microsoft overall is pretty strong. It used to be you couldn't have a ho-hum PC quarter and have a great Microsoft quarter, but Microsoft is much different than it used to be.
Yeah, absolutely. If anything, PCs are still a big part of the financial story, but not really meaningful component of the narrative. And that's really becoming the case with AMD as well. Whereby if they've really performed well on those new AI chips that they launched, it would more than make up for any shortfall that they're seeing in the PC business. So, they just launched that new big AI chip in the last few months. They provided rough guidance for it in Q4 and then for this year. So I think an update to those figures, I think it was $2 billion for 2024 as far as AI revenue from that AI chip. If that is updated or increased, that obviously is going to be received very well. But AI is really driving the narrative around these names and accounting for a lot of the multiple expansion that they've enjoyed.
Okay. AMD results are out. We're going through those results, too. We'll bring you those momentarily here. In the meantime, Mike, actually, we have them. Christina Parts-Nevelis has those results. Christina.
I do. So let's start with earnings per share adjusted at 77 cents. So that's in line with what the street was anticipating, with revenues of $6.17 billion to be precise. Let's call it $6.2 billion, which is slightly stronger than what the street was anticipating. I'm just looking quickly at the guidance for this upcoming current quarter. We're in Q1, and they are anticipating revenue to be $5.4 billion, plus or minus about $300 million. So 5.4, which is in the middle range, a little bit lighter than what the Q1 revenue guidance was at 5.7. So I'll come back with some more details, but it seems like data center revenue for last quarter was strong at 2.3 billion, but I'll have more soon.
Okay, sounds good. Shares are down about 3% right now. Christina Partsinevelos, thank you. Don't miss a First on CNBC interview with AMD CEO Lisa Su. That is tomorrow at 9:30 a.m. Eastern on Squawk on the Street. Adam, I'll go back to you. We got shares of the chip maker trading lower, still going through, looking for some more details here. But I mean, it's all about AI, right? It's all about data centers. It's about PC recovery. It's about taking market share from Intel. But at the end of the day, it's really about how are they going to ramp production, get this new chip out on the market, and take on NVIDIA, which we know has such a huge lead and was such a huge story last year.
No, exactly. And AMD's a company, well, they'll put guidance in the press release, but they usually do give a lot of important detail, especially around AI for the last few quarters. That comes on the conference call, so I'd be careful to kind of just draw a conclusion from the text in the press release. I want to hear what management has to say on the call about this new chip launch. Is it ramping? Are they signing new customers? Et cetera. I think that really will determine how this thing trades tomorrow.
All right, Christina Partsinevelos has more on AMD. Christina?
Yeah, the stock reaction that you're seeing right now has much to do with the guidance for Q1. The reason for that is the range that they provided is about 5.4 billion. I mentioned that just moments ago, which is a little bit light. And more specifically, they say, and I quote, AMD expects data center segment revenue to be flat with a seasonal decline in server sales offset by stronger data center GPU ramp. So keep in mind a very similar situation that we saw from Intel. They guided lower for their PCs and data centers in this current Q1 quarter. And the only difference here is AMD is, talking about their data center GPU ramp, which is going to be happening more so in the second half of this year. But no update on that $2 billion revenue number for 2024 in regards to their AI chip revenue. I know that's what we're waiting for on the call.
Yeah, Christina, that's a great comparison to call out. Intel was short on its revenue guide by about $2 billion. Of course, it's got bigger revenues overall. AMD is short, I guess, by about $300 million at the midpoint, right? Because the high end of their guide is where the street was looking for the midpoint to be. So in a way, that's comparable.
Yes, you're 100% right if we're talking about the range. So the only thing I could see right now from this is just the concerns that data center revenue is going to be flat for the quarter and a warning of seasonal declines in server. But so far, it's not majorly disappointing to what you just pointed out for that guidance, which is $300 million less than what the street wanted.
All right, Christina Partsinevelos, thank you. And our thanks to Mike Santoli and to Adam Crisafulli. Well, Alphabet shares in the red, despite beating on the top and bottom lines. Let's bring in Evercore ISI's Mark Mahaney. Mark, shares are down 4% right now. We talked about the fact that cloud revenue came in a little bit better than expected. But Google services, it looks like, also slightly better than expected. Advertising maybe a little bit light. And YouTube ads, it looks like largely in line. Why do you think the stock's down as much as it is right now?
Well, Morgan, I think you set it up right. The results came in better than expected, but not from search revenue and not from YouTube revenue. And there were a lot of expectations, Chad, on the market that both of those were very strong going into the holiday. So expectations were high there. I don't think there was a dramatic miss, but this was a high expectations part quarter. Where they did positively surprise me and some other investors, but definitely me, was their margins came in better than expected. There's a $1.2 billion charge. You take that out. Margins were very solid for the company. I give them credit for that. My guess is that overall, numbers will probably go up on the street. On this. And they just met them. They didn't exceed them. That's why the stock's pulling back.
Yeah, I'm glad you called out margins, too, because we know OPEX costs, cost cutting, that's going to be a focus for the same as well, and what those ongoing efforts look like. And we did get the commentary of, quote, we remain committed to...
All right, I needed to cool down. Missed out on several $1,000s of money there. So I was just slightly upset, just very, very slightly upset about missing out on thousands of dollars. But other than that, I'm doing okay. AMD just turned green. That's intriguing. I think at the end of the day, just everybody wants to pile in AMD because they just are convinced the AI money's going to start hitting as 2024 goes along, right? And they want to be there for that.